China's stock market barely moved this past week. But underneath that calm, something dramatic happened. Money rushed out of technology and into the old economy: coal, oil, banks, and metals. Every one of the top 10 Shanghai Composite stocks was an old economy name. Here is the countdown. Hello everyone, and welcome back to the channel. We are continuing our global market series with the top 10 Shanghai Composite stocks for the first week of July 2026. Clarity, figures in this video are rounded, and any dollar figures are in US dollars. Let us count them down. At number 10, dairy giant Yili gained 5%. Yili is one of China's most defensive, dividend-paying consumer names, and its climb looks like part of the week's dominant trade, investors reaching for cheap, steady businesses that pay them to wait. At number 9, Bank of Communications rose 5%. It was one of several big state banks that quietly held up the entire market this week. Interest rates low and safe returns hard to find, these lenders have become the market's favorite source of fat, dependable dividends. And that hunger for yield carried the shares higher. At number 8, China State Construction Engineering added 5%. This is the country's giant state-owned builder. Exactly the kind of cheap, unglamorous, government-backed stock the market had ignored for years. This week, the crowd rushed back into precisely these low-priced value names, and the builder rode that wave. At number 7, China Life Insurance climbed 6%. China's big insurers have spent the year buying up each other's shares, a public vote of confidence that the sector is simply too cheap. That signal, layered on the stampede into value stocks, gave China Life and its peers a strong week. Number 6, oil giant PetroChina gained 7%. Oil prices held firm, with Brent crude near $73 a barrel. But the move was far bigger than the barrel alone would explain. PetroChina is really here as a classic value play, a vast, profitable, dividend-heavy energy champion, exactly what buyers wanted this week. Number 5, China Merchants Bank rose 7%. Widely regarded as China's best-run bank, it led a banking sector that acted as the backbone of the market this week. As money fled fast-growing tech, these steady, high-dividend lenders were the obvious place to hide, and they were rewarded. Number 4, China Coal Energy jumped 7%. Coal was the single hottest corner of the market this week, the leading sector, with many miners rising more than 5% as a group. The buying likely reflected expectations of strong summer power demand and tight supply, and old-fashioned energy was suddenly the trade everyone wanted. Number 3, Sinopec surged 8%. China's refining and oil giant was swept up in the same energy rally, with oil and petrochemical shares among the strongest groups on the board. Like PetroChina, it is a cheap, cash-rich giant, and in a week when investors wanted exactly that, Sinopec was a natural winner. At number 2, coal heavyweight China Shenhua rose 8%. Shenhua is the giant of Chinese coal and power, and it rode the very same coal rally that led the entire market. It is also known for paying enormous dividends, which made it a perfect fit for a week defined by the hunt for safe, generous payouts. And at number 1, Zijin Mining led the whole leaderboard, up 9%. Zijin is China's biggest gold and copper miner, and it is the purest expression of the week's dominant trade. With gold and copper near record highs this year, and money pouring into commodities and cheap value stocks, the country's premier metals producer was exactly where that money wanted to land. No other stock captured the rotation more completely. And on the other side of the leaderboard, solar maker LONGi Green Energy fell nearly 11%. While the old economy soared, the new economy was dumped, and LONGi captures that perfectly. China's solar industry is trapped in a brutal price war, with far too many panels chasing too little profit. So in a week that punished growth, this former market darling was sold hard. So this week's Shanghai story was never really about 10 separate companies. It was one giant trade, investors fleeing technology and racing into coal, oil, banks, and metals. The classic old economy. If you enjoyed this, like the video, subscribe to Global Market Series, and tell me in the comments, is this rotation into old economy value the start of something bigger, or just a quick detour before tech takes back over? Thanks for watching, and see you in the next video.